Welcome back, students who are taking financial accounting, and in this series of videos we are starting a new chapter, chapter 9. So this here series of videos right now will be on the theory portion of the chapter 9, which is current liabilities and long-term debt. This is will just be an introduction video as to what we're going to cover in this series of videos before we start doing the exercises and problems that are assigned at the end of the chapter from the digital study guide. Okay, so we're working on let me back up here real quick. And we're working on current liabilities and long-term debt. Just to give you an idea, maybe because you're not stepping back and taking a long-term view of this. Realize that, let me get my pen here, realize that right now what we're talking about here is the liability side of the balance sheet. Remember, on a balance sheet, and that's kind of like what we've been going through in, through the textbook, right? We have assets is equal to liabilities plus our equity, right? And in the first 3 chapters, right, basically we covered the bookkeeping aspect of it. But then beyond that chapter, we started looking at the various things that were, required from, as part of our asset side of the balance sheet. Now, let me just quickly pop open the textbook here. I mean, we talked about inventory, right? We talked about standards, then we talked about cash and receivables, right? And we talked about long-term and other assets. So remember, just as a quick, this should be in your mind. As I'm talking about this, you should not have to be referring back to the textbook. You should be able to see this in your mind. But on the asset side, you'd have like cash, accounts receivable, inventory. Then you would have your fixed assets, and whether that's things like intangibles, intangible, natural resources, things like that. If you look at, if you had looked at your table of contents, you'll see we covered things like cash and accounts receivable. We covered inventory. Then we covered most of the assets that would be involved in a business. So now what we're doing is we're moving over to the liability side of the balance sheet. On the liability side, there's generally, well, I can't say generally. I could say generally. For a lot of small businesses, they'll have more assets than they will have liabilities, right? Now, I mean, that's the way it's supposed to be, because assets minus your liabilities gives you your equity. You should have equity in the business. If you have more liabilities than assets, something's wrong, right? So that's why it's, chapters 4, 5, 6, 7, and 8. 4, 5, 6, 7, 8. That's 5 chapters to cover the asset side. But now here we're going to look at one chapter to deal with all of the liabilities, right? Because there's really not that much involved, and I'm not going to get it. We're not going to get into a lot of the detail of it, because things like accounts payable. All right. I mean, one of the chapters on the asset side was accounts receivable. Okay. We're not going to get as involved with the accounts payable, because accounts payable is the flip side of accounts receivable, right? So there's really, you've already been laying foundation for a lot of this stuff. Okay. So you're basically going to just be looking at the things that aren't being covered, or excuse me, haven't been covered as much from the asset side. We're going to talk about current liabilities, and you should be already familiar with this from the previous chapters. Okay, I mean current liabilities, accounts payable. Okay, even more short term, your notes payable. We're going to talk about the current portion of long-term debt. Now, this is something that hasn't been covered. You know, when you have long-term debt, there's two portions to it, a current portion and a long-term portion. So we'll cover that. Actually, we'll do that in the next video, I believe. Then we have to deal with the warranties. Okay, how to estimate your warranty liabilities. Then there's, you briefly touch upon contingent liability. Read that in the textbook. Something like that, that's to just give you an introduction. It's just to, stick it in your mind that there's such a thing as a contingent liability. But that's covered more deeply in intermediate accounting if you're going to end up having that subject. Most business management people will not have intermediate accounting, but your finance and accounting people will. So, but for the business managers, read that page or two that talks about contingent liabilities so that you have some idea as to what is being talked about if you ever have to come across it. Then the chapter will cover long-term debt. Well, you've already been exposed to mortgage payables. Okay, think back into math for business and finance, and even in financial accounting, and it was touched upon in those two subjects for bonds payable. But now this chapter here, the primary thrust of this chapter will be how to deal with bonds, because bonds are a liability, and they're very they can be complicated if when you first look at them. If you understand the underlying structure of a bond, then they're not that difficult at all. But that's what the thrust of this here chapter will be mostly about, is understanding bonds. And then we have lease liabilities, where we have operating leases and capital leases. What's the difference between the two? And then lastly, as always, we'll have a focus on decision making, the ratios that pertain primarily to having to deal with liabilities. All right. So this has been a brief introduction. Definitely you can't replace this video with studying the chapter, because I am not covering everything that's covered in the chapters. I'm not going to talk about things like contingent liabilities and other topics that are exposed in the text material. I'm not going to cover absolutely everything. I'm not going page by page. I'm covering the more important things, or the things that you'll be more exposed to or have more frequently asked questions about, and definitely the bonds payable. Okay, so with that said, excuse me, that's the introduction, and we'll pick up in the next video with the current portion of long-term debt and go from there. All right, and as always, if you don't understand something, when you're going through those videos, watch the videos again. That's why you have videos. That's the strength of them. And if you still don't understand something, feel free to telephone and speak with an instructor. So see you in the next video.